Welcome to the Knakal News Network. The Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hi, I'm Elisa Berlin, Director of Sales at Massey Knakal Realty. Welcome to the Knakal News Network. Today, I'm here with Bob Knakal, Chairman and founding partner of Massey Knakal. With the recent mayoral election, do you feel that with possibility of real estate taxes increasing, what impact will this have on the market?
I think that when we look at the task that Mayor de Blasio is going to have of trying to negotiate his 153 municipal labor union contracts, figure out whether those folks should get retroactive pay or not, but you need money to do that. And unfortunately, the mayor can't control income tax rates, but can control real estate taxes.
If real estate taxes continue to grow, what impact will this have on the market?
Well, it would have a negative impact on the market. And I think we have to be realistic that real estate taxes are going to grow. And in a marketplace where our real estate tax burden can be as much as 30% of gross revenue, there's not really a heck of a lot of room to raise that. So I think that our elected officials have to be cognizant of the fact that you can't choke the industry with burdensome taxes, because the real estate industry, in one form or another, contributes over half of the revenue to the city.
Locally, what are the other impacts of the recent election?
The mayor has said that one of his initiatives is to create more affordable housing and to preserve more affordable housing, and that's something that the city desperately needs. It's just a matter of how that affordable housing is created. And then lastly, public safety. Clearly, New York City has been a tremendous beneficiary of the fact that the last two administrations were able to keep crime down. Tourism is at an all-time high, and you could make the argument that the reason New York City came out of the recession as well as it did was because we had 47 million or 49 million or over 50 million tourists visiting the city each year.
Tell me about the risks national politics has on the market.
There are things like immigration reform that would certainly help our economy grow, trade agreements, but I think that more importantly than either of those factors is what happens to our interest rate policy, and what Washington does will absolutely have an impact on interest rates.
Do you think tax reform is on the table in Washington?
Yes, from what I'm hearing from my friends in Washington, tax reform is something that could be part of a bigger bargain that the parties are able to make. That could have positive and negative effects on our marketplace. In a positive way, it's likely to reduce the corporate real estate tax level. It's also likely to simplify personal taxes, maybe having only 2 or 3 marginal brackets. On the other side of the coin, though, part of this probably is going to jeopardize some of the tax deductions that we have. For the real estate industry, mortgage interest deduction is a very, very big one. And we also have the deductibility of charitable deductions. And in New York, as you know, charities play such a big role in helping the folks who are disadvantaged here. But more importantly, for New York and the entire tri-state area for that matter, is the deductibility of state and local taxes. And that means that someone living in New York City could pay a disproportionate share of their income in taxes. That could tend to drive people out of the city. So it's a very delicate balance that I hope that our elected officials can find. In summary, potential speed bumps to the traction in the commercial real estate sales market are led by local political factors that will affect real estate taxes, public safety, and affordable housing. And on a national level, tax reform could be something that could either have a positive or negative impact on commercial real estate.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.